Folks, this live stream is brought to you by my sponsor AAA FX. Now, they're a fully regulated broker in Europe and South Africa, offering Forex indices, commodities, crypto, and over 100 stocks. Now, at AAA FX, you pay no commission on any Forex pair using their
Let's do this
Plus
for
account
and
low commissions on cryptos and stocks. Plus, you can deposit with cash or crypto, get a free VPS with deposits over 5K, and easily integrate the well-known copy trade service Zulu Trade. While you're waiting for the stream to start, go and check them out by clicking the link in the description, comments, or visit AAAFX.com.
Yo, that beat. I'm jamming to that beat.
Proper. Do you guys hear that beat as well? Or is it just me and Rod?
No. Everyone hears it. It's
I'm pretty sure everyone's nodding their head. Everyone's getting into the vibe, you know.
Yeah, no, that's a decent beat. So well done, Cam and Mark, for finding that beat. I really like that intro. It's very catchy.
But a good little ringtone as well for your phone.
Well, listen, guys, welcome back to the Trading Nut live streams. So you are joined today by myself, Rodrigo Antonio, and Diego Torres. We are the bank level traders, and we're here to bring you some higher probability setups using smart money concepts, wave theory, and we are filtering out the most high probability trades, the best banker blocks, best order blocks using our pattern recognition system. So guys, it's all about good vibes out here. We're always having a good time. Trading these markets, man, it's tough. It is tough. So you got to have a bit of fun with it. So Diego and I, we've been working together for since the beginning, like literally since 2014.
Yeah, almost around a decade now, haven't we?
Yeah. And it's something that we've worked in multiple trading floors, one of them being a hedge fund in Mayfair in London. So we had clients from Dubai. We were managing over 7 figures, and that's where we learned the bulk of the current strategy that we use. And we were being mentored by 7-figure traders. And so they were mentoring us not only with the tactical part, the strategy, but they're also mentoring us with the mindset, the psychology, the way to think, right? How to think like a 7-figure trader. And so,
our mentor at the time, he was really hardcore. If we make a mistake, he will put it on us, as in, what are you doing, Diego? That's completely wrong. I told you to do this. It was really hardcore. It wasn't mentor that's really, he's friendly. No, if you did it, no, really hardcore. So we learned extremely fast. And just to give you guys some perspective, I mean, he was managing 100 million before he wanted to do his own thing. So we all came together and we were introduced smart money concepts with certain different heat maps and algorithms as well, which is what everyone's doing now anyway.
Yeah, so we've been doing this for quite some time. And so we decided that we wanted a little bit more freedom. And that's when we became funded traders. Because when we discovered that not only can we manage other people's money, we can do it from the comfort of our own home. So we've got our own home office, and we get anything between 70 to 90% profit share. Well, actually, it's like 100% profit share with CTI. We were like, what? We're getting paid 2 to 5% profit share at the hedge fund. We were like, no. Funded trading is the way forward. So we've been funded trading since 2019. And we haven't looked back since. It's the being a funded trader has so much freedom. So type a 1 in the chat if you want to achieve financial freedom as a funded trader. Just type a 1. Let me know, because that's the kind of people we want to provide value for. We've done it for ourselves, and so now we want to help you guys achieve the same. So type a 1 in the chat if you want financial freedom as a funded trader. Fantastic.
100%. And the best thing is, guys, it's risk free. It's not even your capital. You know, trading with your own capital, or saving money from your day jobs, or taking investments from friends and family, that's going to have a huge effect on your psychology. Whereas when you're just trading funded capital, it's risk free. So your psychology is going to be a lot easier. You just need to worry about your strategy, not worrying about your managing friends and partners' investments. That just puts a lot of pressure on yourselves. And we've been there before, right? We've managed capital for friends, and there's a lot of pressure. You know, this is why it's a big innovation to the markets at the moment, funded trading.
Yeah, there's literally, there's never been a better time to be a funded trader like right now, where, you know, there's thousands of people losing their jobs. You know, we literally are in a recession, and it's going to get worse next year. And so being a funded trader, having this independence, being your own boss, you know, managing 6-7 figures is life-changing. It can really take you from, you know, like maybe right now you're just struggling, you don't really have a strategy, you don't have the time. And so, you know, you got to imagine being able to have that freedom, have that being your own boss, managing other capital, being funded with multiple firms. But what you need is a strategy. What you need is a strategy and mentorship to get you to the point that you can be consistent, because that's the key. Right? You need to be consistent with the strategy, with mindset, risk management, and there's no better way than joining the bank level trading community, myself, Diego, to support you every single day. So we're going on live streams just like this, but with the bank level traders. Of course, we go into a lot more detail. So we're showing you guys literally like a little snippet, like this much of the BLT. And of course, we show a lot more detail to the bank level traders. So who's on the bank level trading community? Anyone in the chat? Just type in BLT, let us know. So yeah, let's do a recap of what we covered last week, because we have we're constantly making forecasts, we're constantly looking at multiple and review multiple markets, and sometimes we're able to take a live trade in front of you guys. So let's see if we can find anything today. But Diego, if you could recap on what we looked at last week, a couple of the forecasts.
100%. I'm just going to cover Aussie and the S&P 500. Otherwise, we'll be here for too long. I do believe Annie Ratos, share your link. We don't have a link directly towards the Discord community, but you can access the community by enrolling into the course. And once you're enrolled to the course, you have 1 free month within the community to show you guys the value that we provide, such as the live streams, the back testing, the forecast, the live training, and obviously the community and everyone involved. So 100% if you're willing to do that. Now, let me quickly share my screen. Am I sharing it now? Nope. Let me share my screen. Let's check this out. Okay, let's start with the quality is terrible, guys. Don't know why it's a bit blurry, but I think I must have took the screenshot at the wrong time, or just terrible quality. You know, you cannot hide from it. So there we go. So this is literally a screenshot of last week in the live training session that we did. When was this? The 9th of December? I believe it was the 9th of December, wasn't it, Rod?
Yeah.
On the S&P. So just to quickly cover it, we were anticipating a rally to the upside. If you look at the descending compression channel towards the ascending trend line larger pattern, there was a lot of confluences for price to rally to the upside, especially with that momentum that you can see followed by a flag. But it's still not in clear water. We were anticipating a break of structure, which was, you know, if we do get a close above the yellow arrow line, as you can see, right? So we've got the bullish flag, lots of confluences, expecting a rally to the upside. And this was live in front of you guys, just a forecast. There was no entry at the time. There was no rules to enter the market. Sometimes we may forecast a setup, but there's no entries, right? We need to wait for the rules. We need to wait for the checklist, right? We're disciplined traders. We have to wait for it. So the forecast was bullish to the upside. Now let's quickly check what we've got on the S&P real quick. Let me get it up and see what has happened since. There we go. Let me go back and then share the screen. It's not coming up for some reason. Hold on, let's put this away. Put TradingView up. And it should be... Okay, let me move it to the screen. Bear with me, everyone. Sure you guys took a mental picture of that setup. This should work now. There we go. Okay, so this is the S&P. If we go back to that particular time, this was the forecast. So it did actually go up. This was the pattern I was referring to. The trend has been updated. And then we did get the breaker structure. Right, so this is why we need to wait for the confirmation. Right, we were bullish, but we need to wait for a break of the resistance. Unfortunately, we didn't really get a retest. Normally with the BLT, we get a retest towards a bank block, and then we get involved long, but the direction was correct. This is why we tell traders, forecasting is very, very, very easy. You know, very easy to forecast, but getting an actual trade is a different ballgame. You know, we were anticipating a pullback towards a banker block that took out structure. As you can see, a pullback, breaker structure to the left, a pullback towards the banker block. This was where the liquidity took out the previous structure. All of this accumulation was finally ended by this particular banker block with this massive momentum, but obviously there was a lot of news and it didn't really retest it. So that analysis was complete and that was done. Did anyone manage to capitalize on the S&P by any chance from last week? There's still strategy, work, and options. Yes, options, crypto, and stocks. It definitely does. And do you do in-person classes? Not yet, but that's definitely something that's on the roadmap for the future, but not as of yet. Everything's all online and within the community. We will also be implementing one-to-ones if anyone's interested. Okay. Let's look at the other forecast real quick. I believe it was the Aussie. And then this real quick. This is actually a really good forecast. All right, can you guys see the screen now?
Yep, all good.
Yeah, all good. Lovely, lovely. So the forecast at the time on the Aussie, the yellow line, if we can zoom in, the yellow line here, we were anticipating a pullback towards the banker block that took at the previous structure, the banker block that caused a rally to the upside. Right, notice there's massive liquidity here. And again, just to recap, this was last week's Trader Nut forecast. So it did rally to the upside. We were anticipating a pullback towards the banker block and then a rally towards this top end of the pattern. So let's have a look at the actual setup and see what happened. And I do believe I have the same analysis there. Let me change the screen. There we go. And there's the Aussie. Go to the 1 hour. And it's exactly what we forecasted. which was a pullback towards a previous banker block. And this is the previous banker block right here, as you can see. And it did eventually go towards this area. So well done if anyone managed to capitalize on that forecast, any of the BLT members or any of you guys on TraderNut. So that was a pretty decent setup there. Yeah, so that's complete. So yeah, this was just the forecast. It's an update from last week.
Nice. So what do you have this time for dollar, Aussie, euro?
Yeah, I mean, there was a lot of news last night with FOMC. So when that happens, sometimes the next day or two, there's not too many setups. I mean, if we're looking at the dollar for today, this is also what we forecasted as well. I mean, I remember Rodrigo saying if price closes above here in last week's forecast, it's very likely going to fill up all this gap. And look, it's already broken to the upside. It's struggling a little bit, but most likely is going to retest a previous banker block that took out the structure, grabbed the liquidity to come back up and fill all of this imbalance and volume, right? So it's the same principle with the Aussie that I just showed you, but it's happening again with the dollar. So this is a potential scenario. But with that being said, if we look at the M15 real quick, it's kind of struggling here, right? It's kind of struggling. There's a bit of a flag, but we still need further development, as you can see. So still early times on the dollar. We've got a bullish flag with, it's not too clear, but I'm definitely favoriting longs towards minimum, at least this banker block here, right? So this is where the big players will be, they're going to be just playing ping pong with everyone. So the metaphor that I like to say is when you've got a break of structure, I can zoom in if it's not too clear for everyone. That should be okay. That should be fine.
If anyone's struggling to see the candles, make sure on YouTube you have high definition 1080p, and then you'll be able to see the chart a lot clearer.
Absolutely, absolutely. Now, referring back to this is our target, right? That's our particular target. Why is this target important? Can anybody answer this? Right? Does anybody know why this particular banker block is an important area of interest for the big players? Who can answer that? Just message in the comment box.
Looks like that's right. Yeah, break a structure. It's a change of character as well.
And liquidity, yes, 100%. So yeah, that's spot on. That's all you need. We don't have to complicate stuff. It's literally where there was a break of structure and where the liquidity is at, right? Why is this liquidity? Well, look at the liquidity. There's billions and billions of dollars just pumping to the downside. But most importantly is we've got a break of structure, right? So we know there's going to be a retest, right? To take it one step further, a typical break and structure of a support and resistance that many retail traders face, that everyone has faced in the beginning of the journey, goes something like this, where there's a break of structure and you're expecting to sell the market, right, at this particular area. Very textbook, Google, YouTube, amateur courses online, which is just basic baby pip stuff, right? That's just your basic support and resistance. Whereas if you study the piece of information and you see a banker block somewhere around here and it causes that break of structure, there's normally a retest towards this banker block, meaning the retail participants, they get stopped out. So it's very important to just know the difference between support and resistance, break of structure, and where the liquidity is at. So if we can see this particular resistance or support and resistance, we know that if there's any stop losses just above this resistance or even just above that, they are very likely going to get mitigated and filled within this banker block or even a plan B banker block up here, right? But at the moment, you can see the intent from the buyers from, this is literally this morning. It rallied to the upside, but it never had enough liquidity to come up all the way towards where the previous liquidity is at. So what's going to happen now is, where do you think price is going to go to next? It's going to go back to, if you look left, there is a banker block. It took out structure. So it's the same principle, but on the flip side for the buy setups, right? Look at that break of structure. Brilliant break of structure. So my forecast at the moment is a retest towards this point of interest, grab the liquidity, fill up the petrol tank, get some volume, and then it's going to have some momentum to come up towards this particular area. And once you can identify how to spot liquidity, when to step away, then you'll be able to identify when to use the new banker block towards particular, let's say, an area of interest down here. And then you can just keep on literally forecasting the buys, the sells, the buys, the sells over and over again with a really high success rate. I quote, it's forecasting. It's different to trading. You know, with the BOT, we have a minimum forecast of, I don't know, 80, 90%. It's very easy to forecast when you understand the BOT fundamentals. But again, trading is a little bit different, isn't it? And yes, spot on, Samuel. The order block was responsible for the breaker structure. That's it. And pretty sure most of you would probably know some of these concepts. Some of you are new to it, but these are just textbook concepts that SMC is indicating. So at the moment, what do we do with the dollar? We step away. There's no setups. We just wait. Exactly, Vito. Very, very good point. You can be right about the direction, but still be wrong about the trade. So the trade, you still need to wait for confirmation. Like this particular setup here, I still haven't gone deep into it. You know, there's still this mini banker block here, right? Look at this banker block on the M5, right? This is what you call a plan A banker block. We've got a plan B banker block, and we've got this larger banker block. Which one do we take now? Can somebody answer which one do we take? What do you think is the highest probability banker block or order block on these three scenarios? Who can answer that? No, nobody can guess. The third one, the last one. Why is that? Why is that, everyone? Well, I'm going to assume that you're saying the third one because it's where the main liquidity is at, 100%. And this is why we need to have a probabilistic mindset, because what's going to happen if price does this? Right? What's going to happen? Have you got a plan for that? You're waiting for the perfect banker block. So am I, by the way. But are you also prepared to take a buy setup at a plan A banker block? Most importantly, there is also a pattern that's in confluence with the first banker block, right? There's a pattern here. So we can anticipate that this banker block has a good probability to be the one that's going to take us further up. So we don't always have to wait for the one at the very bottom or even the one at the middle. We need to wait with the one that has a pattern in confluence with the banker block. So this one, to me, I would definitely be looking at some confirmation. But even then, I'm still not going to take it. I still need further confirmation. I want to see a break of structure, a rejection, some momentum on the M1, then we catch a retest, and then we get involved. Once we wait for those schematics at either A, B, or C, then we act on it, right? Once we see a reaction, then we take action. Or what's the quote that you said the other day, Rod, which was very, very catchy? Reaction or something. Go on.
So you got to wait for the reaction in order to make your reaction, or in order to give your reaction. Yeah. So So waiting for that reaction is important. There's no point trying to catch these sniper entries with a limit order when you don't have confirmation. We first need that reaction. The thing is, you got to remember, guys, that we are basically following smart money. We're not moving the markets, they are. So it's when they move, when they make the first move, we make a move. So we got to wait for them to make a move before we make a move, because we don't know how big their orders are. That's it. Wait for the reaction to take action.
Precisely. Now, if we look at this market now, look, there's a potential reaction now. This is why the smaller time frames, and we go into more details within the BLT community. Look at this. Look at this particular banker block right here. Right? There's a reaction there. And guess what? It's in confluence with a bit of a parallel pattern. Look, there's a bit of a parallel pattern, a bit of a parallel sort of channel there. It's not perfect, but it's the M1. Look, this has potential to be the banker block, right? So imagine just waiting for the perfect one down here. You're going to miss a potential opportunity approximately around here. But guess what? Again, even this is still not valid for us, right? And there's a reason for that, because of the relevant highs and lows that we go into in more detail with the BLT members. So this could be tricking some of the other SMC traders, right? But we still don't have confirmation, believe it or not, right? This to me is still not a valid trade. I would personally like to see a break of this structure, rally, and then we can catch a retest. But at the moment, this is a dangerous game trying to take this buy here.
Good question here from Olivier Hon. I like that name, by the way. Do you guys also look at negative correlation with pairs using dollar? Absolutely, yeah. Correlation is a huge part of what we do.
So important.
It's important for us to see the institutional money flow. Like, we want to see. The perfect example is looking at this week's inflation data and the CPI release. All you can see is bullishness on indices, and where is that capital coming from? It's coming from the US dollar. So what happens to the DXY? It tanks, and it happens instantly, guys. It happens instantly. So they're selling the dollar or shorting the dollar in order to go long the indices and stocks. So so correlation is for us is very, very important, because we are bank level traders. We're following the banks. Yeah, so there is news incoming. We've got ECB. So good. We're going to see a lot of volatility on the euro and the dollar in a minute.
Interesting. So we could have some opportunity today. What time is the ECB?
ECB, let's have a look. I think it might have happened already. It's usually at 1:30 UK time. Let's have a look.
Okay.
So ECB was at 1:15. So they kept rates. They hiked the rates as expected, 50 basis points. But now we've got initial jobless claims from the US coming out in the next minute or so. And retail sales, etc. So there's going to be a lot of volatility with the euro and the dollar for the next hour, because we've got the ECB press conference in about 15 minutes. So yeah, we should be seeing some really nice movements.
Lovely. I'm just tidying up this flag. It's looking pretty interesting. Go to the M5 real quick. This low. Yes, this is still, there we go. Nice clear structure. I'll personally like to see just some clear structure. 1, 2, 3, and then 4. So this banker block looks very, very interesting. If we do get a rally towards the upside, and even better, some compression on the way down. So this is why I said this banker block here, you know, it's a dangerous game. So already we'll filter this one out. And look, it's gonna take you out. Valid on the M1, but not in confluence with one of the clear BOT setters that we're taking. Now, even this particular, I mean, this is all live. This particular banker block now this is gonna become invalid, right? Just a second ago, I said it's looking like a decent banker block, but immediately because of the pattern and what's developing right now in front of you guys, I'm going to cancel it. It's an invalid pattern, invalid banker block. So this is the beauty of the BOT. As price develops live with you guys, you're going to be able to identify the low probability banker blocks with the high probability banker blocks. So now I'm interested in this one here, right? And why was this one? Why do I believe this is a low probability? Is what I just mentioned. If you paid attention, we want to see clear structure, clear Elliott wave structure. 1, 2, and look, there's no 3 and there's no 4. There's no third tap. 1, 2, 3. Right. This is what we want to see. Right here, we don't want to see 1, 2, and then a rejection from here. So this banker block, we eliminate it. There's going to be many traders, many SMC traders taking it, but we're not going to be taking it because we know
it's really important, guys. Yeah, it's really important, guys, that a big part of trading. So write this down, guys. Yeah, write it down in the chat. Write it down in a notepad. It's very important to understand that not being in a trade is a trade. Okay, and so most of your time should be spent avoiding low probability trades, but you need a system to filter out these low probability trades. You need a system to filter out all of the order blocks that are low probability. Yeah. So someone type it in the chat, because that's a very important point that you need to understand as a trader.
100%. And Viti, I'm definitely writing that down.
Not being in a trade is a trade. Why? Because of the number one rule, guys. Number one rule. Number one rule in trading is preservation of capital. Okay, your 100%. Number one job is to protect the capital. It's not to make money, it's to protect the capital. Yeah,
it's so important. I mean, you know, the reason we trade, when we sort of take it one step further, why do we trade? Right? We trade for financial freedom, and we trade to change our lives. We trade because we're depressed about our current situation. I don't know, whatever it is, we're trading for money. That's what people normally come into, right? So there's a deeper sort of sense to that. So for you to not trade, you're already breaking those previous psychological barriers, right? You're creating that discipline within you by just not trading. You're breaking that pattern of, yes, you know, I'm trading to make money. I need to change my life. Right, but when you understand that just stepping away from the markets, you're actually preserving capital, waiting for a high probability setup. That's when you're going to start seeing some results.
Yeah, so absolutely. And what I'm about to say I'm just dropping bombs today, yeah. Because what's important is that how many times have you been in a situation where you wish that you were in a trade and you wish you were out of the trade? Yeah. How many times? Just type a 1 in the chat if that happened to you, that, you know, you were in a trade wishing you were out of it. Because it's better to be out of a trade wishing you were in than being in a trade wishing you were out. For those that, if you understand that concept, is very important, because I would rather skip a trade if it's not valid, it's not filled my criteria. I would rather be out of it, and even if it moves in my favor, I'm like, okay, I'd rather be out because it's not valid according to my system, because that's building discipline. That's building the belief that I am a disciplined, consistent trader. I follow my rules, not my desires. I trade what I see, not what I think. So that's exactly what V2's saying. Your goal is to protect your capital, Not taking a trade can act as a form of capital preservation, especially for the long term. Couldn't have worded it different, that couldn't have worded it any better. That is exactly what I'm saying. And I'm so glad that you guys have attended this live stream. It's currently 1:35 here in the UK. I don't know what time it is where you're from, but you're committed. And look, we're here helping each other. We're working together, and we're talking trader wisdom right now.
Absolutely. We've got Lawrence in the building. I just put it out of a trade on UJ, which would have banked 3.6R in 1 minute because I was nervous of the news since he got slit hard the other day with your stop loss. What trade was that? When was that? Yesterday, FOMC, Lawrence.
Yeah. So on these situations, it's an important lesson that today's trade has nothing to do with yesterday's trade. Yeah, I'm just dropping bombs today, guys. Just write that down. Yesterday's trade, whether it was a big win or a loss, or you got slipped, or you made a mistake, that's yesterday. Leave that out the door. When you enter into every trading session, you need to go into the flow state. That means that you have to practice mindfulness. You have to practice some breathing. You have to be very present. Yeah. So all of what happened yesterday in your personal life, in your trading, with your, whatever's happened, leave that in the past. So that's an important lesson for you, Lawrence. Is
100%.
Is to not allow these external influences, these past mistakes or past losses or even past wins to influence your current trade. Your current trade is a unique moment in the market, and this is for those who have read the famous book Trading in the Zone by Mark Douglas, that every moment in the market is unique. So yesterday's trade doesn't matter, guys.
Absolutely. I mean, that's so critical as well to your everyday life. I mean, if you were to, I don't know, just a random explanation. Say you're going to the shop. There's somebody in front of you in the queue, and they don't move, and you're in a rush. So you have this tension because you need to get to a meeting at a certain time, but the person in front of you is being really late, right? And then you have this anger towards them. But then, they turn around, they apologize, saying sorry, etc., etc. And that's it. Then you still got this anger. You leave because you're late for your meeting. But then guess what? When you see that person the next day, are you still going to be angry at them? No, it's the same with trading. Every trade is different. Even when you take a loss, that's it. You learn from it, you journal it, and the next trade is a new trade. Same with wins. You journal it, you take it, you feel confident, but you should only really feel confident and euphoria for the first few minutes or the first few seconds. But then once the trade is done, that is it. You lock out and you forget what just happened. You just journal it, and then you start planning for the next trade. That's the mindset that you need to have. Never attach yourself to winners, losers, and mistakes, right? It's so important, everyone.
Yeah, I think we're getting a lot of love and support from you guys. So yeah, make sure you're smashing that like button if you're finding value. And yeah, it's all about winning. It's all about winning and learning.
100%. Have you guys ever listened to Mark Douglas's audiobook or read the book Trading in the Zone? Highly recommend it. I think it's key point for me. The big game changer is, and he quotes it himself, the secret to trading is emotional discipline. That's it, right? If you don't have emotional discipline, you'll never make it as a trader. What is emotional discipline? Does anybody know what emotional discipline is? Can somebody type in the book? What is emotional discipline? Can you give an example, actually? No feelings. I would disagree with this one, El Viejo. You need to have feelings. We're humans, right? It's what sets us apart from an animal. It's emotional intelligence. It's impossible to not have feelings unless you're an algo, right? So this is really important. It's really hard to have no feelings. And I know that, that gets thrown around the air quite a lot, having no feelings. But the trick is you need to have feelings. If you're aware of your feelings, that's going to make you confident in taking a trade. If, for example, there's a trade, you follow the rules, it takes all the checklist, but then you feel a little bit nervous and a little bit hesitant, but then you take it and you take a loss. Guess what? You never listen to your feelings. It's so important. But why did the trade not play out when your feelings was telling you that you're hesitant? Well, there's something wrong. You need to study that trade. There's something in your subconscious that never picked it up. Maybe you never double analyzed your charts. Maybe you missed a fine detail, or you didn't sleep properly. You probably had 2 hours of sleep, so your risk appetite goes out the window. The trade is right in front of you, is valid, but you feel hesitant, but you're not in the right state of mind. Feelings is critical. You need to have emotional awareness to increase your emotional discipline. It's critical for trading, guys, honestly.
There's this comment here from ALP27 HD. I really like this one. It's being able to sit alongside the feelings without acting. So so when you sit alongside your feelings, means that you are aware, emotionally aware of the current emotions you're in, and then you think to yourself, oh, I'm actually on tilt right now. I want a revenge trade. I want to get this money back, but I'm not going to. I'm gonna sit with it. I'm gonna sit with these feelings. I'm gonna go for a walk. I'm gonna do some press ups. I'm gonna go make love to my woman. Like, so anything to get your mind, the mind off the tilt, right? Whatever you need to do, guys. Whatever you need to do. There was another really good one that I like here. This one from Gayan. The game is to monitor your emotions as a set of data and to monitor how they change according to circumstances. I really like this one because it basically means that you need to record your emotions as data. Exactly. And over time, you're going to have all this data, and then you can use that to then filter out when you're in your A game, your B game, your C game. You can start filtering out. And if you guys don't know about this stuff, what I'm talking about, make sure you read that book, The Mindset of Trading by Jared Tendler. He goes into detail on this. Guys, I'm loving this live stream. It's just gone. It's talking about my favorite subject is trading, psychology, mindset, discipline. This is what it's all about. Because when the more experience you gain as a trader, the more you understand that this is a game of your self-discipline. It's literally that. It's being able, and an emotional intelligence, discipline. Emotional discipline. That's it becomes it's literally a game of that.
Yeah, it's literally. I mean, I love that you guys are interested in the subject because we can all relate to it. This is what's going to separate you from the retail trader and the professional trader. I mean, who here has heard of Denise Shaw? Has anybody heard of Denise Shaw? Just write a number 1 if you've heard of her. Write a number 2 if you haven't. And in the meantime, while you're writing number 1 and number 2, she is the original psychologist that plays, what's the name of the actress in Billions? Has anyone seen Billions? She literally helps other multi-millionaire portfolio managers help with their emotions.
I think it's Wendy.
Wendy, yes. Go Google her. Google the original Dennis Shaw.
Denise Shaw.
Go on her YouTube. Denise Shaw. Go on her YouTube. Go on her Twitter. Spotify. Many interviews with her, and she goes over what we're talking about, using our emotions as data points to filter out the trades where we're smashing it and when we're not smashing it. When I look at my journal or Rodrigo's journal, one thing we have in common is our best trades when we hit 10, 15R is when we're composed, confident, in the zone. The trades that hit break even or we take a loss, are they just rubbish trades? Our emotions are telling us when we're looking at the journal that we're hesitant or there's a lack of sleep. So once you can see these emotions in your journal, all you need to do is just pick out the ones where you're confident in the zone, filter out those strategies, and always make sure that you need to feel in the zone. Mark Douglas, trading in the zone. There's a reason everything comes together, guys. Honestly.
Yeah, so the book, Denise Scholl's book is Market Mind Games. It's one of my favorite books. I've read it a few times. The way she writes it is it's like she does it in a fictional way. But in fact, she's making a lot of points, making some really good points there. So yeah, whoever's watching, who's watched Billions, Bobby Axelrod will not survive without Wendy. Psychology on point. Yeah,
so
yeah.
true.
It's one of my favorite shows. Honestly, it's brilliant. But there's a question here by T. Cass. So how to build better discipline? Right. So this is the $1 million question: how to build better discipline. So for me personally, there's a book called Atomic Habits that goes into how to build better discipline in very good detail. So Atomic Habits by James Clear. So essentially it's an accumulation of very small habits, small tasks on a daily basis. And there's a lot of research because based on our circadian cycle, based upon from when we wake up, the first 8 hours are critical, very critical on achieving these habits. After 8 hours from waking up to your first 8 hours, after 8 hours, you get what's called limbic friction. So there's a lot of friction, there's a lot of resistance, there's a lot of that voice in your head saying, I'll do it tomorrow, I can't be bothered, or I'm tired. So the first 8 hours, you got to get all of your biggest habits, the most difficult ones, your workouts, your diet, your meditations, your journaling, your trading plan. All of these things need to be done in the first 8 hours of your day. And every day, I'm talking about every single day, you need to be able to do that. In the first 8 hours, it's so important. After 8 hours, the only habits you should be doing are really easy ones. Easy ones. Like, for example, an easy one would be to just remove all your drawing tools off your chart. Just clear your chart. At the end of every day, just review your journal, clear your charts, wait for the next day. Something like that. Something really easy, like these habits that are part of your process, but I'm not going to cause you too much limbic friction. So that's my answer to discipline. It's small atomic habits built over time that you're gonna then get the compound effect. Yeah, the compound effect works not only in scaling a trading account, but it works with your own habits, because then you build momentum. So the longer that you stay with your habits, man, that's when you get better results. That's when you start. So imagine building. It's like those guys that you see in the gym. They go every day, right? They got big muscles. They got the 8-pack. They got, right? It's because they do this every day. Now imagine building habits for your mind. Imagine how powerful that is every single day for like 10 years. Imagine what that would do for you.
Definitely. I mean, you just mentioned something about gym, and funny enough, I saw a case study the other day regarding people that go to the gym. Now, there was this one guy, he became this world champion or whatever, I can't remember his name, but he never had the discipline to stay in the gym, right? He'll go to the gym a few days and then he'll stop going to the gym. And it's just on and off. And then the New Year's is there. He'll be consistent for a week or two, maybe a month, but then he falls back off, right? I'm sure a lot of people can relate. It's really hard to be consistent with your gym, going every single day. But the way he done it, he had a mentor and he told him, for the first week, go to the gym, but go there for 5 seconds and then walk away, right? He done that for a week. The week after, go there for 30 seconds and then come back. And he just kept on building those small habits till eventually it got to the point where, okay, go to the gym and just stay there for 5 minutes and then walk away. And then go to the gym and do a 5-minute workout. And it just built the routine and the habits of going to the gym. Then eventually he was consistent with his gym and he used that to implement it with his other days' lives. And now he's a world champion. It's just these little tricks that you need to be aware of. And we can do the same thing with trading. There's so many hacks and tricks that we can do. Mastercraft, hey, why are you ignoring my questions? What question are you referring to?
I think we went in too deep, man. We've gone in too deep into psychology. I love
Okay.
these topics,
Okay.
man. But
All good.
like, I think Mastercraft, you wanted some questions regarding
Strategy.
which, I think it's this one, isn't it? Which sign indicates in the chart that big players will will are going to enter? So the easiest one is a breaker structure. So actually a specific breaker structure, which is known as a change of character, right? So when you get a change of characters, when you get actually an actual breaker structure, then you want to look for the banker block. We call it a banker block. Other people call it order block or breaker block. So you want to find these change of characters. So that's how you would see the sign. So this is what we refer to as a confirmation. So what we need to wait for that confirmation. We need to see the big players step in. If you use volume, you should be able to see high volume with that breakout, with that breaker structure. You want to see that. And so these are sort of signs to show you that big players are stepping in. So we're going to go into the charts now, and we're going to go and show you guys what this actually looks like. So some of you guys will know, some of you guys obviously don't, but we always cover break structures and change of character all the time. It's part of our process, really. But let's cover. You covered DXY now.
Yeah,
Oh, that's looking
DXY.
that's a really nice reaction, that, isn't it?
Yep. And also regarding DXY, we need to update the patterns, right? What's the new pattern here? Look, lovely compression. So we just update the pattern. So now all of a sudden, this banker block is looking at the one that's the original bottom, but at the moment, we still don't have confirmation, right? We want to see something like this. We want to see a clear rejection of this particular high. Nice breaker structure. If we do that, and if we do get that, then we can anticipate a pullback towards either a banker block here or an imbalance there, or I think that's about it, to be fair. And we have a bit of a QM. So this has potential to be the bottom, right? So it's really important to look at the lower timeframes for clearer clarity. And if we redefine this on the M1, we can see that this was the actual banker block right there. As you can see, that's why it's important to go on to the lower timeframes. Yes, we had this banker block here, this large one, where most people would assume it's the one that is going to go long. It does have a probability, but if you go to the lower timeframes, there's many banker blocks here. Look, there's one here, many banker blocks on the M1, right? But we're using the one in confluence with a pattern. And look, we now have a very clear pattern. So this is beautiful, beautiful BOT setup. This is actually a trade that you can take. Not one of my favorites, but already you would have probably been up 5R. Personally, I would wait for confirmation, such as a break of structure. It's a nice clear momentum. And then we can look for a pullback towards a new point of interest. And then we can get involved in the long, right? So that's one way of approaching it. But again, look, it's not breaking structure. It's just a liquidity grab at the moment. We want to see a clear breaker structure. At the moment, it's just messing around the resistance. So it's still not confirmed, but it's definitely at a very clear, interesting point. So that's the DXY. Let's look at the, let me see. Let's look at the Euro. It's getting a bit sunny here. Okay, Euro, zoom out a little bit. Okay, decent. If we zoom out onto the Euro, we look to the left. There's a banker block here, massive one right here, but there is equal highs just above, right? Meaning that's a low probability banker block. So I'm personally anticipating a further push to the upside on the Euro towards more or less down here, right? Which, let's zoom out real quick just to give you guys a bit of a further understanding. Right, what do we see here? There's one tap, two tap, and third tap. You can still, trend lines are also liquidity when you think about it. Many traders are taking this setup and there is liquidity here, right? This is retail liquidity and we can expect a rally to the downside. Same with double tops, right? One top, two tops, stop losses are here, stop losses are here. But with the BOT and SMC, we know that double tops means there's liquidity above. So retail will get stopped out before it drops. Same with the third tap trendline setup. There's a third tap, there's a bit of a stop hunt, and then it drops. So that's what I'm expecting here. We've got 1, 2, 3. Expecting one more push to the upside. Take out liquidity, not only on the third tap of the trend line, but also the equal highs here and potentially even up here. So nice little boomerang setup, very vintage textbook BOT setup that we have within the community.
So good question. Good question from Paulo. Usually, do you have several levels of profit on a trade? If so, how do you calculate average risk reward? So yeah, this is what we go into detail in the course, in the bank level trading course, because yeah, there are different ways of doing it. You can bank all of it at specific points, or you can bank at several levels. It really depends on the system. We personally, we do partials, and the reason why we do partials, and there's another technique that we do in order to reduce risk. So this is all the stuff that we cover in the course. So yeah, there's a reason why we do these things. So yeah, we do take partials, and so the way we calculate our average risk reward, there's different ways of doing it. You can calculate it average win in dollar amount, and you can calculate it as average total risk reward. So if you bank partials at 3R and then you bank partials at 5R, then you know you can say, right, I've banked 8R from this trade. Right, it really depends how you manage your personal journal. There are journals out there in the market that will do this stuff for you automatically. So you've got your Trader Vault, you've got Edgewonk, you got MyFXBook. So yeah, you can use any one of those journals in order to calculate your average risk reward.
Absolutely. I think also what's important is you need to know your numbers, you know, because if you study your numbers, you look at your data, and then you see that 80% of the time that your trade goes to 5R and then it completely hits a stop loss, that's giving you an indication that you should be banking a big proportion at 5R. Other traders might be a little bit different. You might see 2R 80-70% of the time, and it rarely goes to 5R, but then it completely melts at 2.5 or 2R. So what does that mean? You should be taking the bigger proportion of your partials within that 2R mechanic. So you need to know your numbers. You know, also, when do you trail your stop loss? Do you trail it after a break of structure? How often does it take you out, right? Once you trail your stop loss after a break of structure, out of the scale of 10, does it come back to break even 50% of the time, 20% of the time, 80% of the time? So you need to know your numbers in all directions, guys. It's so important, everyone. So important. That's why with my trading in particular, I know that 80% of the time it reverses or it goes to my break even at around 5 to 7R or 8R. So that's my window of tolerance. I don't want to have a target of 10R because I know the majority of the time it doesn't go to 10R. It likes to reverse from within 5 to 7R. So I'm banking a large proportion at 5 to 7R. And then my 10R target, I've got a little bit running just in case it goes there, because the data does suggest that it does go there every now and again. Right? So you need to know your numbers, everyone. Everyone's going to be different. We're going to literally see the market in a different way, have different results, react differently. So you should have a different tailored trading plan. Okay, let's go back to the charts. So we'll look at Euro. Just what I'm going to do here is separate this trend line so we can focus on it. We can focus on it at a later date, because what's going to happen, what's likely going to happen is potentially we might get a rally to the upside before a drop. And if we do get that, we just update the trend line, such as this, right? But at the moment, because it's really struggling to find the resistance, it's doing a bunch of manipulation, taking everyone out on the massive daily trend line. I am expecting a rally to the upside. So let's focus on these patterns here. Which one is more relevant? To be fair, they are both quite relevant. Even if we separate these two patterns, this is the most recent relevant pattern right here, look. So I'll be interested in this one. And then we have a bit of a plan B. Let's separate this one. I'm actually going to delete this one here. I'll be interested in this particular setup, right? So I'm still going to wait for the euro. Personally, what I like to see is two scenarios. Either if it can just drop towards this area and then a rally, then this is a textbook 1, 2, 3, 4, 5, nice little boomerang. That's fine. Do I want to take a trade for a short if it comes up here? Not necessarily, not at the moment, because there's only 1, 2, it's just one move up. So that's a bit of a low probability when you're looking at Elliott waves, unless it develops into a new pattern such as this, right? That might tell a different story. This is why we're using patterns, so we're updating accordingly. And now it just changed the narrative. So this large pattern was low probability, invalid. If we separate it and we focus on this current pattern, all of a sudden we've got a pretty decent high probability pattern, 1, 2, 3, and a potential boomerang, right? So I'll definitely be looking at shorts once we complete this larger structure pattern. And if I'm looking for a scope, because of everything I've just mentioned, the longs are definitely favored, right? And if we update it accordingly on the M15 or M5 for more clarity, there's a break of structure here. Look, nice break of structure. So although I'm waiting for shorts up here somewhere, I could anticipate and predict a probable pullback if there's a new pattern here on the M5 towards a banker block or an imbalance. Wait, let's take this off. There we go, nice little imbalance. In terms of a banker block, I can't really see any. Let's investigate further. It looks like it's just flying. I mean, it's gonna have to wait. We do have this area here as it's been filled, but I'd like to see a pattern approximately there. But as it stands, it is definitely looking quite bullish, and I'll be expecting new highs by the end of today for sure. But if we can get a pullback, one thing I've already done, I've accepted the fact that this could just, it can climb up here, and I'm gonna miss the long. I've already accepted that. So my mindset right now is, if it goes long from here, it doesn't matter. There's gonna be a short that I'll be prepared for, right? But my rules does not suggest to getting long here. I need to look for confirmation around these points of interest and then get involved in the long. But I've already accepted the fact that it could go long now, right? So FOMO is not really something that I suffer from. FOMO is a bit of a trader condition, you know? Okay, so that's the euro, expecting longs, and then lastly, dollar yen. Dollar yen is it's in the middle of no man's land. This was trading that last week, so just recap what happened here. I was expecting shorts and then potential longs. This happened. So just watch last week's trading nut live stream. I don't really have time to cover it today. As for a setup for today, it's in the middle of no man's land. I'm going to step away from the dollar yen at the moment. Yeah, it's not looking clear. Aussie, Same thing in the middle of no man's land, just a bunch of equal lows, no clear patterns, too much momentum. One of those days that you just want to step away within the BLT. And dollar CAD, it looks like this particular setup is complete. It's reached the banker block that we anticipated from last week. So we can update this, delete this, update it from potentially from here if we get a rejection, which means we need to update this end of the pattern. But this is only valid if we get a strong momentum to the downside. So again, even dollar CAD is also in the middle of no man's land, and I'm still expecting his move to the upside. So that's it for today's forecast, everyone.
Yeah, it's been a really good one. I think we should definitely do more of these, talking about, you know, psychology, talking about risk management, the emotional part of trading. So yeah, if you guys enjoyed that, just type a 1 in the chat, and then we can, you know, talk about and discuss these things further next week. So yeah, because yeah, these are very important topics that you guys need to understand. Very, very, very important. So yeah, taking, like Mad Lucky saying here, taking full responsibility for your ability to thrive is very, very important. So yeah, I posted a link in the chat. And for those who are interested in working with us, working alongside us, trading with us every single day, where we share our trades, you're literally looking over our shoulder while we, you know, we're sniping the markets. Then I've left a link in the description for more information, where you can learn about the bank level trading strategy. So there's a course that we offer, and there's a monthly subscription. The monthly subscription is only $50 a month. You get the first month on us, so you guys can trial and see what it's like to be a bank level trader, to see the live streams, to see how we trade. You see all the wins, all the losses. You see our back tests, and we're there's so many traders. All of us are posting back tests, so you can learn from each other, ask questions, have an accountability, have a trading buddy where you can set up these back testing sessions. So it's important for you to understand these concepts a lot better. So yeah, for those who enjoyed our session today, next week I believe we are back. Let's see if I don't think we've got a date in the diary yet. But it would most likely be probably same time next week Thursday.
Next week Thursday, I believe I'm going to be off for 2 weeks from next week, but I'm still going to try and make the live streams anyway. So
okay, all right, that's commitment for you guys.
Yeah, because I do enjoy it, and you know, it's just part of you can't just stop doing live streams and trading. It's just part of your everyday life. It's like if you're an athlete, if you take a little holiday, it doesn't mean you don't have to work out and you need to stop your diet. You still need to be in the zone consistently, even if you're on Mars or the moon, you know, always.
Absolutely. And there was one trader who this week we started, so we shared one of the trades that we were taking, one of the live streams, and there's a trader that made $5,000 in 5 minutes from this strategy. And so, you know, it's when you turn up to these sessions of, so we do these live streams within the BLT community, the bank level trading community. So these are private sessions
for the BLT members.
Exclusively for the members, exactly. So if you guys are interested, I left the link in the description of this video and in the chat. So I'll post it. I'll post it again for you guys, just for those who are interested. Otherwise, you can join our Discord, the City Traders Imperium Discord. Reach out to us, come have a chat, and we'll give you more information.
I've just posted a link to the Discord community. So if anyone's interested, just investigate, check us out, say hi to everyone. And if you want to learn more about the course, then just go on the website. And I believe Rodrigo's just posted the link to the course. So
Yeah.
it's all there. It's all down to you guys. Invest in yourselves. It's all about you guys.
Yeah. So guys, thanks for attending. Good luck with your trading today. It's been really, really, really enjoyable. It's been an absolute pleasure. And we'll see you same time next week.
100%. Thank you, everyone. Again, it's been a pleasure. And it's just good to talk to other traders. I know trading is a very lonely sport. Everyone right now is behind a computer by themselves. But if you're part of a community, we can grow together, bounce with each other. That's what it's all about if you want some edge in the markets. But with that being said, everyone, have a good day, trade safe, and back test, back test, back test.